Hello everyone, welcome to KPMG's podcast covering the recently issued Accounting Standards Update 2013-12, Definition of a Public Business Entity. This ASU was recently issued by the FASB and defines a public business entity within the Accounting Standards Codification Master Glossary. My name is Haley Krebs and I'm a Senior Manager in KPMG's Department of Professional Practice. This podcast was recorded on February 14, 2014, and for the next few minutes, I'll highlight some of the key considerations in applying the definition of a public business entity. The FASB issued the final standard in December 2013, and it became effective with the issuance of ASU 2014-02, Accounting for Goodwill, and ASU 2014-03, Accounting for Certain Receive Variable, Pay Fixed Interest Rate Swaps, Simplified Hedge Accounting Approach, in January 2014, as these two consensuses of the Private Company Council, or PCC, were the first accounting standard updates to include the new definition of a public business entity. The definition does not impact existing guidance issued prior to these ASUs. The board deferred a decision about whether to amend the existing definitions of non-public and public entities and further impacts on the accounting standards codification associated with those definitions to a later date. The purpose of the ASU is to provide one definition for use in U.S. GAAP, to be used by standard setters when establishing future standards. The definition identifies which entities are within the scope of the private company decision-making framework and will generally be eligible to use any private company exceptions or accounting alternatives that the PCC will develop. Even though the intent is to have one definition going forward, the board will continue to analyze new guidance on a standard-by-standard basis to determine applicability. This may lead to the exclusion of an entity from certain exceptions or alternatives that would otherwise be available to private companies. Additionally, the FASB will determine whether all, none, or only some types of not-for-profit entities will be eligible to apply accounting and reporting alternatives within U.S. GAAP for private companies as those new standards are developed, as the definition excludes all not-for-profit organizations. The ASU also excludes from the definition employee benefit plans within the scope of ASC Topics 960, 962, and 965, even when one or more of the criteria are met. The definition includes 5 criteria, and if a company meets any of the 5, it would be considered a public business entity. The first criterion deals with whether the entity is required to file or furnish financial statements with the SEC, or if that entity does file or furnish financial statements with the SEC. For example, a broker-dealer that is required to file financial statements with the SEC would be considered a public business entity under this definition. Likewise, a filer that is not required to file financial statements with the SEC, but does file with them voluntarily, also meets this definition. This criterion also applies if an entity's financial statements or financial information is required to be or is included in another company's filing with the SEC. In this case, the financial information of an equity method investee of a public business entity that is included under Rule 309 in the public company's filing would have to be prepared using the same accounting principles as a public business entity. The board did clarify that an entity that does not otherwise meet any of the other criteria in the definition generally would be permitted to apply accounting and reporting alternatives for private companies in its standalone financial statements. This includes entities whose financial information is required to be or is included in the filing with the SEC under Rule 309. This could result in 2 sets of U.S. GAAP financial statements for a company: standalone financial statements including private company alternatives or exceptions, and financial statements for consolidation or inclusion in a filing excluding those alternatives or exceptions. The next criterion in the definition includes entities that are required by the Securities and Exchange Act of 1934, or rules and regulations established under that act, to file or furnish financial statements with a regulatory agency other than the SEC. If an entity is required to file or furnish financial statements with a regulatory agency in preparation for the sale of securities, or for the purpose of issuing securities that are not subject to contractual restriction on transfer, it would be considered a public business entity under the third criterion. Both the second and third criteria include foreign and domestic regulators in order to include entities that prepare U.S. GAAP financial statements that may be used in other jurisdictions. The next criterion involves entities that have, or are conduit bond obligors for, securities that are traded, listed, or quoted on an exchange or an over-the-counter market. Since most of the current definitions of a non-public entity exclude entities that are conduit bond obligors for debt securities that are traded in a public market, this is not a significant change from current practice. In the last criterion, if an entity's securities are not subject to contractual transfer restrictions, and it is required to make U.S. GAAP financial statements, including footnotes, publicly available on a periodic basis because of legal, contractual, or regulatory requirements, it would also be considered a public business entity. An entity must meet all of the conditions included in the last criterion to be considered a public business entity. The board clarified that a periodic basis could include interim or annual periods. This slide includes some examples of entities that would be considered public business entities and some that would not. As mentioned earlier, an equity method investee that is required to include its financial information in a filing by a public business entity, a broker-dealer that files with the SEC, and a voluntary filer would all be considered public business entities. Additionally, a non-public company that is acquired by a public company when the target's financial statements must be filed with the SEC in accordance with Rule 305, or an entity with securities collateralizing those of a public company that files under Rule 3-16 would both be considered public business entities. Examples of entities that would not fall under this definition are a defined contribution plan that files its annual statements on Form 11K, a not-for-profit entity, or a subsidiary of a public company, but only for purposes of its standalone reporting. That concludes KPMG's podcast on the definition of a public business entity. You can find more information on the Financial Reporting Network, including our defining issues on new private company guidance. Thank you for listening.